Trade Simple terminology. Hello and welcome back. Before you learn to trade on our platform, you have to understand the important terminologies that you will likely encounter every day. Once the technical jargon no longer confuses you, you can start using our trading platform to maximize your earning. Let's get started. Buy and sell prices. When you trade Forex, you will be looking at buy and sell prices. Both the prices are fairly self-explanatory. The buy price is the best price for which you can buy an asset. The sell price is the best price for which you can sell an asset. Keep in mind that an asset's buy price is always higher than its sell price. What is a spread? Remember how we just said that buy prices are always higher than sell prices? Well, the difference between the two is known as a spread. A spread can vary from one asset to another. Usually, assets with the highest liquidities have the smallest spread values. What is a pip? A pip, short for point in percentage, is a way to measure the change in price of a pair of currencies or any other asset. For regular currency pairs, such as EUR USD, GBP USD, USD CHF, AUD USD, and so on. Pip is based on the fourth decimal. So if the EUR USD pair changes from 1.1300 to 1.1301, that's a 1 pip move. For most stocks, commodities, and yen-based currencies, such as USD JPY, the pip is based on the second decimal. So if the USD JPY pair goes up from 112.54 to 112.55, that's a 1 pip move. What is a pip value? Now that you know what a pip is, let's talk about its value. A pip value represents the net worth against any 1 pip movement in your account currency. The pip value is important to you as it helps you determine the precise extent to which the price change affects your profit and loss values for every trade. Let's look at an example. If the pip value for a trade on EUR USD is $5 and the price increases from 1.1300 to 1.1301, it means that you just won $5. What is investment amount and leverage? And how do they impact the pip and trade values? Leverage is the ratio between the trade value and the invested amount. Investment amount is the capital that you are putting on the line for a trade. Trade value is the size of the trade which you place on the market. Say, for example, your investment amount is $100 and your leverage is 1 to 100. This sets the trade value at $10,000. A higher trade value means that you can take a larger position in the market without having to invest the full capital. The pip value is dependent on both the invested amount and leverage. This means that the higher the trade value, the greater the pip value will be. What is the take profit amount and how does it impact the take profit price? The take profit amount is the amount of profit you intend to earn from a trade. When you set a take profit amount, the trading platform automatically adjusts the take profit price. This will be the exact price at which you will be able to realize the profit value you set above. When any asset reaches its take profit price, the trade is automatically closed. This results in the take profit amount getting credited to your account. What is a stop loss price? A stop loss price is the price point at which you want your losses to stop. A stop loss price helps you to limit your losses in an unsuccessful trade. It is a good way to take controlled risks while trading. When you set a stop loss price, the trading platform automatically closes the trade as soon as the stop loss price is hit. This means that a stop loss price defines the maximum amount of loss you can incur during a trade. What is open P&L and how do you calculate it? An open P&L, profit and loss, is the current profit or loss that your open trade has incurred. Open P&L is calculated via 2 steps. First, you find the difference between the current market price and the price at which the trade was opened. Then you multiply the obtained difference by the pip value to obtain the open P&L. So if we go back to the example we gave before where 1. The pip value for your trade on EUR/USD was $5. 2. And the price went from 1.1300 to 1.1301. In this case, the open P&L will be $5. See how it all fits in? What is a payout? A payout is the ratio which highlights the return you can make on your invested amount when the trade reaches the take-profit price. In simple terms, a payout is the take-profit amount divided by the invested amount. It is shown as a percentage. What is the potential return? Potential return is a term that represents the amount which will be credited to your account balance when a trade reaches its take-profit price. In simple terms, potential return is the sum of the invested amount and the take-profit amount. These were some of the most important terms that you needed to know before embarking on your trading journey. Stay tuned to learn more. Happy trading!